All right, it's time for our first panel of the day. Chris Skinner is going to join us again to moderate the discussion on open banking and digital challenges. So 30 minutes to determine the future of digital banking. Clock is ticking. So I'm going to invite Chris and his panel to come up on stage and to introduce themselves and get the discussion going.
Thank you. And hello again. I'd like my panel to join me on stage. It's Arturo Gonzalez MacDowell from Eurobits, Paolo Barbesino, who you've already heard from Emirates MBD, Ruth Foxe from Anthemis, and Simon Vans-Colina from Monzo. And before the panelists get to say their introductory words, I think I should define open banking. And that we've talked a lot about things this morning, from APIs and analytics and apps and PSD2 and PSD3. In fact, the difference between PSD2 and PSD3 is that PSD2 allows third parties to access banks' data through APIs. PSD3 allows banks to access third-party data through APIs by regulatory force, I think, hopefully. And open banking for me is this marketplace of thousands of specialist companies doing one thing brilliantly well. But for a customer, I don't want to look at 1,000 companies doing one thing brilliantly well who I don't know, don't trust, and don't have any relationship with. What I want is my bank to curate and select from those thousands of companies the ones that can give me the best service and experience and bring them to me, having done the due diligence, so that the bank's endorsing them, therefore I can trust them. And for me, that's what open banking is, that the banks start to collaborate, partner, and do investigation and selection of thousands of companies from around the world that can potentially provide better customer experiences and bring those to me. And the reason why I define it that way is that I can then say, do you agree? And so to begin with, maybe each of you should actually say a little bit around where you come from. I know we've already met you, Paolo, but we haven't met the other three guys. So Simon, why don't you introduce yourself from Monzo?
Is this on? Yeah. Hi, I'm Simon. I'm an engineer at Monzo. I've been at Monzo since the beginning. I look after Monzo's open banking APIs and our interaction with the account information service providers and payment initiation service providers. I'm an engineer. I code most of the time, all day, and recently I've been working on the savings pots that we rolled out in conjunction with Investec, which, like you said, is our first powered by a partner marketplace integration. Well, actually, it's our second. Our first one was TransferWise.
Thanks. Excuse me. My name is Ruth Foxe. I am a venture capital investor. I am with Anthemis. We're a sector-focused fintech venture capital firm. It's been around for about a decade, and I've been investing in fintech and insurtech for about 7 years. So know a lot of startups, and I've seen a lot of folks coming up in the space. And I work on a couple of investment vehicles at Anthemis, one of them in partnership with UniCredit, which is also represented here, and is also a customer of Maniga. And so, yeah, looking very carefully at this ecosystem and how incumbents work together with emerging tech.
Hello, everybody. Thank you to Maniga for allowing me to be here today, sharing some time with you. I'm Arturo Gonzalez, the CEO of Eurobits. We are, December 15 will be 15 years old. So that makes us the oldest account aggregator in Europe, I think by far, which I don't know if it's good or bad, according to what Chris said before. And we are basically in the game of helping both banks and fintechs prepare for the open banking world.
Yeah. Paolo Barbesino, Multichannel banking, Emirates MBD, Dubai, and yeah.
Well, I start with my question for you, Paolo, because I said that one of the biggest challenges is for a bank to change its thinking and culture to be open and collaborative, because most banks are traditionally control freaks. They want to build everything themselves and don't want to buy much. And yet now they're having to suddenly change that on its head. How has MBD changed?
Well, I have to say, Emirates MBD, I was surprised when I joined. It's like 7 months that I'm in Dubai, and I'm surprised to see one of the most dynamic bank I've been interacting with. And it's not because I work there, but it's like really interesting to see that despite regulators are not as putting so much as much pressure as they are doing in Europe or in other geographies around open banking, about data protection, about MiFID, there is a strong focus on taking care of these aspects, leveraging a lot of technology. So when I got there, the first thing that I had to do was like to really map the multiple things that were happening and trying to make sense. So, and this is like something that is coming perhaps from the fact that in Dubai, from the government to say the private sector, there is a strong focus on innovation. So the government itself has been heavily investing on blockchain technology. Our bank is also working on blockchain, but there you have like kind of weird mix of traditional stuff and super modern stuff. Like for instance, we put the paper checks on a blockchain. Can you believe this? So why? Because the regulator, or because by law you still have to have paper checks, because they are the only means to just like start a lawsuit if a check is bounced. Otherwise, there is no way. And we just like put this on blockchain. So there is like it's a very interesting and challenging mix between tradition and modernity, and with an environment that is basically conducive to innovation.
So let's just compare and contrast that answer with Monzo, and that I know you mentioned TransferWise and InvestTech, but equally you've been using quite a lot of open technologies to leverage the Monzo analytics and capabilities. Do you want to touch base on the marketplace of APIs that you're tapping into?
Sure. So we don't do very much with the data that we have right now. That's the truth, is Monzo doesn't actually have much of a data proposition right now. We do give customers spending insights. But I think like we're building a marketplace bank, but we're doing it from a sort of customer centric point of view first. We're saying what are people actually asking us for? Like Tom, our CEO, is on Twitter all the time saying like, what's stopping you from going full Monzo? And then we basically just work on whatever people vote for the most. So we're genuinely not doing that much. We haven't, like, because we have published APIs, because we have the account information service provider APIs, 20 companies in the UK have connected to us, and I think 3 or 4 of those are well-known aggregators / PFMs. The 2 biggest ones would be Yolt by ING and Emma. I don't think account aggregation has had its breakout moment yet. Like it's still we have 1 million customers, and I would be surprised if 10,000 people are using an account aggregation service or a PFM at all. But I think people always overestimate the effect of change in the short term and underestimate it long term. And I think like pretty soon, I expect over the next couple of years, open banking is going to change everything.
Yeah, I was quite amused by Geert's slide in that because of the font changes, it read screen raping rather than screen scraping. And HSBC has rolled out Open Connect in the UK, which is screen scraping rather than open APIs. So I guess, Arthur, you said you've been looking at this for 15 years. How do you think the market's developing, and how do you see it going forward?
Well, I agree with what was said, that we tend to underestimate change in the long term. As I said, we've been here 15 years. It's been, many of those years have been a long journey through the desert, and we required a lot of social and psychological change in the market for these to happen. But I think we're on the verge of it exploding, and I think it will go beyond open banking. It will be open whatever. Because banking just gives you a partial picture of a customer's life, which in the end is what, at least in the account aggregation space, is what you're looking after. So if you have your banking transaction saying that a customer bought something from Amazon, what's that? Electronics, furniture, sports. So PSD3, yeah, I also wanted to mention another thing, which is, I think the banking industry is one of the last industries to still be vertically integrated, and I think that's not going to last for long. I think PSD2 and open banking in general goes in that direction. So I think one of the things that will happen, albeit the only thing that you can't predict is the future, is that banks would have to specialize in either being a distribution company or being a factory, but I think it's going to be very risky to be both things at the same time, because it's going to be very unlikely that you're going to be best in class in both.
Yeah, I think going back to my presentation around front, middle and back office, you've got to decide where your core competency is and focus on that and not try and do everything.
Yeah, exactly.
Ruth, I know Anthemis pretty well, from Sean and Nadeem and the guys who've been investing from early stage in many of the fintech startups. From an open banking viewpoint, how does Anthemis see that from an investment viewpoint? I mean, what are the key things that are coming out in the marketplace for you today?
So I think, you know, the comment that you made about, you know, hopefully the open APIs will be accessible and sort of effectively rolled out, or are being effectively rolled out. Obviously, it's huge. Open banking is massive for innovation because it actually sort of enables us to realize some of these dreams. It's interesting, we're converging around this marketplace idea, a platform, sort of cross-industry, cross-functionality in single places where customers and users want to do business. And obviously, open APIs and open banking will allow the finance node of that network to be more efficiently integrated into the other nodes of the networks, of you know, the various networks that we're creating. But I think in order for these kind of dreams to be realized, we need to have good APIs, and this sort of promise of the openness has to happen, and we need to have the sort of cultural shifts that we've all talked about around willingness to work together, willingness of incumbents to work with startups, willingness of incumbents to work together, willingness of government to pay attention to these changes. And then we also need to have really interesting, amazing companies which have specific dreams that they're attempting to reify. And I think one of the things that always interests me about this type of event is that there are so many different ways or similar ways that we can imagine the future, but those things don't happen unless we have companies which actively pursue step-by-step those initiatives. So for us, open banking is something we've been paying attention to since the beginning, and we think it's massively important. It's hugely important to a number of the companies in our portfolio. But there are, you know, and there are a lot of different ways that we can, that open banking will really change the way that we do business and the way that we live.
Yeah, I think there's an interesting point, which is going back to Bradley's opening, we're on the kind of the third wave of fintech. The first wave was disrupt and destroy everything. The second wave was banks saying, well, you're not going to do that, but let's start giving innovation investments and doing hackathons and supporting, understanding what these guys can do. And then the third wave is let's partner. And I wrote last week that Fidor Bank, which had been acquired by BPCE, have applied for a divorce because it's not working out. And the reason it's not working out is there's a huge culture clash between the innovation startup bank and the traditional old French bank. How can banks partner with these startups?
I hope you're not asking me, because it's a really hard question. No, I'm only kidding. I think that there's usually the willingness of someone inside. You know, if I'm honest, I think a success factor is that there's someone inside of the bank who's crazy enough to want to do something really cool and interesting, has a ton of energy to swim against the current, and is going to be the champion of the project. And, you know, similarly, there has to be a certain level of maturity and aptitude on the side of the company. And when we look at companies to invest in, we look at companies that have, you know, have a sort of very realistic and pragmatic approach to working together with incumbents and all of the things that entails. We at Anthemis, we really believe that this sort of new ecosystem will be created from both startups and incumbents, so we think this has to happen. But I think, you know, the success factors for these types of partnerships are pretty critical to get right, and many of them fail.
That's the same question of the other panelists, and I'll start with you, Simon, in terms of if you look at Monzo's partner with Investec. Investec's quite a new bank, to be honest, 25, 28 years old. But what about if Lloyds came and approached you? What do you think would happen?
Sure. So I think that, like, whenever we're talking about partnerships, there's two things that like come straight to the front of my mind, and it's been a tough couple of years, like us trying to work with partners and trying to work out where we position ourselves. The two things that really matter is like, are the economic incentives aligned? And you have to be really straight-faced about that. Like, really, does it make economic sense to do this partnership? And the other one is, does the partner that you're potentially working with literally have the technological capability to do the work? Because so often, we would talk to smaller fintechs or companies that are near fintech or companies that are just traditional finance companies, and they just don't have the technological capability to do the things that we wanted to do. It was really, really hard. With Investec, we found a bank which was aware of what they were and were comfortable with what they were, and didn't want us to do any technological integration with them at all. So Monzo built all the technology ourselves, and it's a pure balance sheet type arrangement. We just move money off our balance sheet onto their balance sheet. We built all the experience ourselves. Whereas with TransferWise, we found a company that had a strong technological basis and that we could consume their APIs. And man, I just wish there was so many more companies out there that were mature technologically. That last slide that was up before, API or die, that's it basically. If your company doesn't have a usable API, we would take meetings with these companies. We'd be like, cool. So very, very first thing we want to do is we want to see the API docs. Can we please see your API docs? And we'd immediately look to see whether it's compatible with our API. Is it RESTful? Is it JSON? Is it or is it going to be SAML and XML and require 6 months to understand? So.
Arturo, the same question in terms of what makes successful partnerships. And do you think banks can resist opening up?
Well, I think last time I checked, water and oil didn't mix, which doesn't mean that you can have a salad, put some oil, and drink some water in the same seating. So I think what banks need to understand is that if you're interested in partnering with a fintech, it's because they are the way they are. So you can't try to control them. Let them live. You can't invest in them. You can partner with them, but let them do things their own way. Otherwise, you're just killing the company. And we have plenty of examples, not only in the fintech and banking industry. You have many examples in big techs acquiring smaller companies and killing them.
Paolo, same question. What makes for a successful partnership?
I think it's interesting, and I was reflecting about how all this is silently framed by regulation. So if I compare what we are discussing here with what we are discussing or what we're doing in Dubai, you see that the regulator is it's a hidden, but is basically shaping the way this is evolving. And if I look at what we're doing, so there's no pressure to do open banking, but there are multiple things happening there. There is a government that is pushing to just transform and digitize the entire experience of living in Dubai. And at the same time, here we're talking about opening up to fintechs that are predominantly European fintechs. Whereas if I look at what we're doing, I go back to your experience, and we're very much looking into China. There are many things that are happening in China, and we're thinking about exploring partnerships with Chinese fintechs or Chinese technology companies because there are many things happening there. And this is happening not because the regulator is pushing us in this direction, but because we understand there is a need. Though I have to say that perhaps we can say open banking is necessary, going back to what Bill Gates said, open banking is necessary, but perhaps banks are not so keen on this. But this is happening. The question is whether the resistance that I see in financial institutions will eventually clash against something that you may see has already happened in the telco industry, where you had at some point, we were seeing the revenues, the evolution of the revenue structure, and at some point you have the over-the-top coming. So this kind of new players that are not telcos, but they bank on the telecommunication industry capabilities to develop something there. And the question is whether we will have in the financial industry like the kind of OTT over the top layers, like perhaps the fat bag that will completely change the way customers interact with their money.
Let's take the top question here in terms of, I was going to talk about something that relates to this top question, and I'll be interested in all your views, and I'll start with you, Paolo, but I've recently seen a few banks talking about using open APIs for life events management. And what I mean by that is there's big things that happen in all of our lives, like our first job, our first relationship, our first home, our first unemployment check, our first child. And those are life events that some banks are now saying we can manage those through an open API marketplace. So, for example, if you're buying your first home or if you're getting your second home, third home, through APIs, we'll connect you with all of the removal companies, with all of the decorators, with all of the gardeners, with all of the local groups that you could connect with, and bring that to you as part of our giving you a mortgage process, because it's not a mortgage you want, it's a home you want, and therefore all these partners will help in creating a home. I've heard similar things around, for example, a car accident, where using open APIs, you can package the car accident. So the car manages the whole accident for you. It calls a tow truck, it calls a taxi, it tells the insurance company that it's had an accident and what's happened, and you don't have to do anything. How do you see data, open APIs, access to other markets, and the enrichment you can give and the value you can give to a customer?
I think that there is a lot of mutual value that can be generated. The question being whether banks are in the best position to leverage this. So, if I make an example, if let's assume that I'm a woman, I go and I'm pregnant, I go to a branch, a banker will notice that I'm pregnant. So, a life event of a new baby coming to life will be somewhere tracked by a bank or by a human being. But the time before the bank realizes that you may turn into a mother may take quite some time, may be quite long. Whereas if I by looking at what I post on social media or by looking at my online purchase behavior, I can detect this event at a much faster pace. So the question for banks is, what is the time gap between like the event happening and the realization that the event is happening? This is the first thing. There are industries or there are players that are much faster at detecting this because perhaps an event is already generating a digital breadcrumb that bankers are not so much familiar with, and they're not capable of leveraging with that speed. The second thing is how good you are at designing the experience, are engineering the interaction with the customer along a meaningful customer journey. And this is like if you look at the entire way we make our services and products available, you see that we basically design stuff inside out. So these are, I think, the main two challenges to achieve this. How fast you are at detecting the event, how good you are designing the experience. Are there players on the market that are better? I bet there are.
Arturo, I'm going to ask you the same question around what adjacent data is useful. And equally, there was a question earlier on today in a previous presentation around using data. Obviously, at some point, it can become a bit creepy. So how to actually use this data so it's not actually intrusive?
Well, regarding the data, I think the three industries that add more value are, first place, banking. And then I would call it a draw between telco and retail. I think insurance, not so much. Most of the data you can gather from an insurance company, you already have it in your banking account. And regarding the creepiness, I don't know, it's very complicated, but I think it's more with the fact how data is treated than what data is there. So in the last few weeks, for instance, I'm going to give you an example. I had a calendar event to try to solve an issue in a team. And the next day, I received a LinkedIn communication about how to solve problems with teams. So that's not a coincidence, and that's happened quite a few times. So we have to live with the fact that intimacy or privacy is a thing of the past. Actually, it's a historical accident. Most of our lives as a humanity, there was no privacy. We knew what the guy in the next next place was doing, and we have to live with the fact that that's going to change again, revert to the origin. And if I may, I want to make a comment regarding the first question, which is one that has most votes, because I think it's very relevant. I think, I don't know, I'm not familiar with Monzo, I'm not a Monzo customer, but I guess that the user experience, which everybody's talking about, can be easily replicated by any bank. But what cannot be replicated by every bank is being cool, being likable, which is what that question is reflecting. So I think that's something the banks have to work very hard at.
I was going to jump to it after talking to Ruth, but as you've raised it, Simon, do you want to take those top two questions and just give a response?
I was going to say this one for lunch, but in 2008, I worked for a big bank in the UK, a big American bank in the UK, and I was also an avid player of EVE Online. And I was working in this bank's department that handled the web banking and the APIs, and it really annoyed me, the fact that I had a better API to access the bank in the computer game. And I've only been to Iceland, this is my third time to Iceland, and it's always been November because I came over for the 2 fan fests. And basically I left that big bank in 2008 and I drifted away from the game, the EVE Online. But in 2014 I got an email from Tom Blomfield and it said, I'm starting a bank with an API. And it was partly because of my experience with having an API access to the EVE bank inside EVE that I jumped and joined. And we stole another piece of technology that EVE was like years ahead of every other bank. EVE Online had an embedded Chrome web browser that had an authenticated web session. And we stole that idea, and it's actually in Monzo now. So when we want to do rapid prototyping, we can actually spin up a web view inside the Monzo client, and we give that web view an authenticated session so it can do things like look at your balance or do your KYC and stuff. And it's actually, it helps us to iterate very quickly, and that sort of came from the EVE bank as well. I don't play EVE Online anymore, but I'm still a huge fan of at the time that I came out here. So.
And just out of interest, I mean, Monzo's just over 1 million customers now, of which I believe 1 in 4 use it as their main account. And recently got a valuation as a fintech unicorn worth over $1 billion. What is it that's driving that growth? I mean, what is it that is driving people to go to Monzo?
It's just better in every way.
Good
I'll
answer.
give you some examples. Like the other, I've been living it and breathing it for 3 years, and sometimes you think it's just like maybe I've drunk the Kool-Aid a bit too much. But I was lying on the couch at home one morning next to my wife, and she got a text message from our old legacy bank, which is red, and we don't use it anymore. And it basically said, like, top up your account by 5 p.m. today, or you're going to incur an unauthorized overdraft charge. And it was like, okay, I don't know what that overdraft charge is. I don't know how much it is. I don't know how much money to put in the account. And I can't log into the account because I've lost that stupid little hardware reader thing. And a couple of days later, we got our phones buzzed. We have a joint account with Monzo. And it basically said, we were unable to pay your American Express bill from the joint account because you didn't have that amount of money, because Sarah's been traveling. She was in Shanghai, and she paid for her team's hotel. And so it was a big American Express bill. But it had the exact amount that was required to pay American Express, like the exact size of the bill. And right there in that notification was a button to just retry it once you've topped up your account. And I just sat there thinking, like, yeah, okay, that is better. And like it's all about that. It's all about just like removing all sources of stress and friction. Anywhere we see stress and friction, we're just like, no, that's not acceptable. We're just going to fix it. And it's great working on something that you and everybody you know uses every day. So it's been a real passion project. I think we do rage-driven development quite often. We sort of like get really angry about something and then fix it.
Good answer. Ruth, I know that Anthemis has invested in quite a few challenger banks. What's the criteria and what sort of new startups are really exciting you?
So I think I'll answer that question. I think that the previous questions are also really interesting. Obviously, we're looking for great teams and attitudes like that, just sort of the desire to make everything better and the need to make it better. And I think that's, this sort of, where is this innovation going to come from, or how is this going to happen? It's going to come from teams like that. It's going to also come from places that do not have legacy systems which prevent actually making different types of data and information compatible and actionable. And I think that, you know, every single solitary company that we've invested in is inherently customer-centric and user-centric. And when I see in the PSD3 question that Amazon, you know, the sort of big elephant in every banker's room, you know, we looked at the, you know, last year Amazon offering loans, SME loans, and I think it's really, what's really essential to understand about that story, and which really reflects on this entire sort of network story, is that the reason that Amazon did that was because it was a way of enabling business. It was a way of being customer-centric and user-centric. So, you know, you and I are the customers, but then, you know, there's the sellers and they're kind of the customers, but really it's just this platform which is being used, and the job of Amazon is to make that platform maximally usable, and you can do maximum business. And so this sort of change, I think that we're seeing a lot of experimentation and the collaboration, but the change is going to come when people are able to do maximum business. And the projects that will work will be the ones that promote that.
Just out of interest from all the panelists, do you see Amazon as a big game changer in banking? Do you think they're actually going to get into banking?
Well, haven't they already?
If you say literally banking, I would say no, for many reasons. One, and Bill Gates was wrong, banking is a regulated activity and banks are never going to die. They may change, but unless you have a banking license, you can't do banking. But the main reason is the profit margin Amazon has on what they do is so high. What would they divest their energy and doing a business that has much lower profit margins? They will eventually do some banking, probably with partners, not being licensed, to leverage their business with high margin, but not being a bank. I don't think we'll never see Amazon or Google or Facebook becoming a bank.
I'll change the question slightly for Paolo and Simon, because I can see our MC is waiting to come back on stage, so we need to conclude. But maybe Paolo and Simon, over the next 5 years, again, you can reference the Amazon question, but what do you think will be the biggest change thanks to open banking?
It's difficult for me to say. I would say, going back to the example of Amazon, we will see like players, like the fatback players, playing an increasing role in intermediating banks in a different way, on the one hand. The other thing is what will happen when blockchain is fully deployed. So once you don't need to physically store the money in a safe place. So what would be about banking? So if you think about like banking, like being mostly about storing money and moving money, blockchain is basically dramatically changed, disrupting all this. And on the one hand, you will have this kind of change. On the other hand, you will have potential, say, over-the-top players that will just like reaggregate banks or intermediate banks in a different way that is unknown to us.
I think people buy things from Amazon because they don't have to type their address in. Amazon already knows where they are, and you don't have to go through, there's no friction to buying things with Amazon. You just go, and it's done. It turns up at your office the next day. I think it's the same for companies like Monzo. We want to create friction-free marketplaces where people can buy the things that they need, the financial services products that they need. The more other companies get out there and make APIs so that companies like Monzo can easily expose and sell and consume those APIs and those financial services and put them in front of customers in a completely friction-free way, those companies will win.
But, sorry, can I say something going back to this? Perhaps it would be nice to note that this year the buy one click patent expires. So Amazon patented this 20 years back. And banks are realizing that frictionless banking is an issue only now.
Plus, it's not clear it's going to be legal in a PSD2 regulator environment. Which, by the way, regulation inhibits innovation. We have to be aware of that.
In some countries, it helps innovation. Yeah. In some countries.
There wouldn't be One quick reply. The Competition and Markets Authority in the UK got ahead of PSD2 and forced all the big banks to implement as a common API standard. And the marketplace that has sprung up to consume those APIs exists because of regulation.
Do you know the conversion rate of Open Banking UK versus screen scraping, according to F-Data? Best case scenario is Royal Bank of Scotland. It's 98%, so screen scraping is still better. Worst case, Barclays, 0.
I think we have to conclude, and my concluding comment is that the big fat bags of this world are looking at taking all the low-hanging, easy fruit from the banks, which is payments and credit in particular. And if you think about all the payments business goes to them and all the loans, credit, consumer lines business goes to them for simple stuff, and you're left with the deposit account, which is the highly regulated, more complicated utility stuff. How do you make money 10 years from now? And the only way you're going to make money 10 years from now is by being good with data analytics and good with data leverage. And that's all about what we've been discussing, I think, except for putting checks on the blockchain. That's a new one on me. Thank you very much to our panel. Thank you.